Hello guys. Hope everyone is good. Listen to Legendary here. Guys, I'm here to drop a trade breakdown on Euro USD. There's something I've been hearing. Something so shrewd. I heard on one of Walker's trade breakdowns. I admire that guy very much. He's a really good trader. He's one of three, if not four, I think three of people I admire. He's really good. He used to trade high risk to reward trades. I'm talking about 1s to 30s, 50s, even 1s to 100s. Man, I fell in love with high risk to reward. I backtested their trades, AA trading, Alex, Waka and Wale. I backtested their trades, all of them, and I figured out that all of their trades were taken during New York or London session, and they had tiny stop loss, even 2 pip stop loss. I studied hard and I started noticing a huge improvement in my own trading. I was able to catch 1 is to 10s, 20s, even 1 is to 65. My biggest risk to reward was 1 is to 85. But the problem I was having, speaking of 1 is to 85, on that trade I missed an entry by less than 1 pip. But to see the potential, because to trade with 2 pip stop loss, you really need precision. You really need precision. There are a lot of people who are not able to trade with 2 pip stop loss. I've done it. As I was saying, really good trades. But as time goes by, I don't know what happened, whether market conditions changed, because I won't be expecting 1 is to 100 if the price is ranging, or if the price is in a cycle, not a trending, but it's also not consolidating, but it's trending in a way, but it shouldn't allow me to get one of those 1 is to 50s. Guys, I really love high risk to reward trading, and I'm still going to trade high risk to reward trading, but there's a trade-off between high risk to reward and strike rates. As I was telling you about Waka, he said that his trading plan is optimized for data, not for flashy high risk reward trades. It takes partials at 1 is to 1 point, at 3, it's 1 is to 3.5, and then it takes the rest at 1 is to 10. The reason why he said that his trading plan is optimized for data. Also, what I noticed, it's not often, or it's not easy to catch 1 is to 50. You cannot do that daily. You can't, and it depends on the market condition. So I have to adapt, because it's maybe two or 3 months to get a really good trade. But I have to adapt because I like taking intradays. The other guy I saw on Facebook told us just take 1 to 3. It will boost your confidence. I've also decided to take my profits at 1 to 2 tops. But I will continue trading high risk to reward, but depending on the market condition. But for now, let's say for this year, even if the trade had the potential of 1 to 20 or 1 to 10, I need to take my profit at 1 to 2, because with the 5 pip stop loss, let's say with the 3 or 2, 5 pip stop loss, a 1 is to 2, I only need 10 pips. So I only need 10 pips. But with the 1 is 100, let's say with the 5 pip stop loss, I will need over 200 pips if I'm not mistaken. And it's not easy to extract 200 pips in these markets. So extracting 10, let's say if I have a 3 pip stop loss, my target is 6 pips. Easy. I can do that day in, day out. Also it will help with my confidence. For example, this trade, I had 2 trades on EU. They both closed at 1 to 2, but it went for 1 to 25. But it's okay, it's fine, because if I'm taking 1 to 2, there's no much of trading management required. I just need my confluences. I just need to place a trade, take profits, and just go do my thing. But if I'm taking 1 to 50, I need to monitor the trade. I need to manage the trade. Also, of which it's a good skill to have. Trade management. It's a really great skill to have. Know where to take partials. Managing a trade. It's a really good skill. So yeah, guys, let's get to this trade breakdown. You see, on EU we've been bearish. You see, we're taking this inducement to the downside, taking inducement, mitigating this extreme to the downside, take this inducement, sweep the previous high to the downside, take an inducement, sweep the previous high. If the price sweeps the previous high, that does not mean it's a change of character. It was just taking liquidity. For example, this one. This candle, this closed above, then went to the downside. This one is a bit tricky. It's much better if the price takes an inducement, then sweep an actual previous high. I can still take the trade to the downside, like easy. But if it sweeps an inducement, then close above a previous high, it's tricky because I don't know whether it's a change of character or. But if it's take the inducement and then take the this extreme and take out this trend and liquidity, it's easy to trade. Okay, yeah guys, we are bearish. This is a trade where I took 4 trades, if I'm not mistaken, 4 or 5. I even wrote how was my psychology, how was I feeling. Remember, we are bearish, but after taking this inducement, let's go to M15. After taking out this inducement and the price closed above, you see the mistake I made. You see, after sweeping this high, I even knew. I will tell you why. You see, after sweeping this high, this is not a break of structure because the price didn't tap the high time frame point of interest. So I knew that for me to be able to take this entry to the downside, the price has to take out this change of character. I knew that you have to take out this change of character, then take out this inducement, tap this point of interest. It can even sweep this point of interest then to the downside. I knew that. I will tell you why. Because in all my trades, the price after taking an inducement, it's like to go for an extreme. That's why Trading Hub mentioned that after taking an inducement, it's 50-50. I need more confluence if I'm trading inducement, and that's one of my what do you call it? A playbook. But and I knew that this supply won't hold. Even this one won't hold, but I still took a trade. I will show you something. Okay, this is a case where the price, if it's token inducement, but this is a sweep. I'm looking for a case where the price closed above. This is also a sweep. I don't understand what's going on. How come I don't have these? Okay, I'm gonna use this one. The candle have to close above, but does not need to tap. See, after taking an inducement but not tapping the point of interest, the price, oh, it's a sweep. Oh yeah, that was a sweep. But I need to wait for an inducement. That's my first entry. After the sweep, it's a break of structure, then an inducement, then an inducement. It took out an inducement and continued to the upside, but I still took a trade-off which was wrong. Okay, which leads us to our first trade. See, an inducement. If the price took out this low, then it's a change of character. But this demand held. This was my, because I took this as a break of structure, and this is an inducement, and this is my point of interest. You see, after tapping the point of interest, and swept the high, excuse me guys, how to pause this thing. Okay, yeah, it swept the high, then closed below. I took an entry. According to our trading plan, this is an awesome entry, but because the price didn't take the 15 minutes change of character, I just took out an inducement. I even wrote here, I'm afraid taking this trade. Very afraid, because deep down I know it's there, it didn't fit my criteria. So yeah, it took me out. Yeah, then I had this one, because I knew also, you see, everything below has been mitigated. See, no demand was left unmitigated. So I was confident taking these trades. I took this one because it swept the high, break the structure, but I knew that I had this point of interest, so I cut loss around here and waited with the pending order, of which it was triggered. I don't feel scared. I was relaxing, I was managing my trade. I cut loss, then I entered here, my first entry, with the 2 pip stop loss and my targets. It was hit fast and neat. After sweeping this low, and because I don't know, it was in line with GBP/USD, so I was so confident. I'm super confident about this trade, also because the last trade I had a win. It fired me up. So everything was mitigated. Taking these lows, going to the high, taking this low, continue going to the high that we had. And this was during London session. And we had this trendline liquidity. After breaking the structure, this trendline liquidity, I knew that this inducement had to be taken out. And a lot of people were going to get it around this area. I was waiting with my pending order exactly here, with my stop loss below, because also I've increased my stop loss. It doesn't need to be super tight. They bought, they were taken out, they sold, they were taken out, they bought, they were taken out. By this point, a lot of people were very scared, because let me see, 1, 2, 3 times. 1, 2, 3 taken out. Then this entry, after taking this into the downside, I placed my pending order right here and my stop loss right below with a 3 pip stop loss. Um, 36. It was at 2.5 risk to reward. 1 is 2.5 risk to reward. You see this one, the first one, with the 2 pip stop loss, hits the take profit, and this one had a 3 pip stop loss. You see the price, because I knew that we have this extreme. So the price went for 50 pips. So our first entry had the potential of 1:25. The second entry had the potential of 1:16. But I was happy, and it was easy hitting these targets, because after taking this high, I had this inducement. After taking this inducement, I took this trade, I cut loss. Second one, I took it, hit take profit. The third one, hit take profit. Easy. So yeah, guys, I'm going to continue taking these 1:2, but this potential 1:25. I also like to take those, but for now, to boost my confidence, also to work on my psychology. Hope you'll enjoy the video, guys. Cheers.